transferring digital money between various e-wallets and withdrawing money directly from bank accounts to top them up. The central bank has announced that non-bank financial institutions like Grab Financial and Razer Fintech will soon be able to connect directly to funds transfer services PayNow and Fast in a move to make e-payment adoption simpler for both individuals and businesses.
Users can only top up their e-wallets with debit or credit cards right now. But come February next year, those who may not have ready access to debit or credit cards can fund their e-wallets directly through their bank accounts. The transfers are expected to cost less.
In Singapore, a credit card transaction for an end merchant could cost somewhere between 2.5 to 3.5%. A debit card transaction could cost somewhere between 1 to 2.5%. But now when you're pulling directly money from the bank account and going to it, of course, there will be a cost, but it is more likely to be less because you are removing a lot of functionalities.
The Monetary Authority of Singapore says this move levels the playing field for non-bank e-wallet players to gain payment access, as PayNow and Fast are the most common forms of funds transfer services in Singapore. Grab says the initiative will enable it to offer new micro-investment products. It adds that it's seen a strong increase in the number of people using its e-wallet GrabPay. Meanwhile, Razer says it'll consider reinvesting any savings from the new payment structure to improve the user experience on Razer Pay. Figures from the Monetary Authority of Singapore show that PayNow registrations have grown by over 40% in just the past year. Average transaction value for businesses using PayNow has also tripled from the first quarter to the third quarter. Banks and fintech firms say the onset of COVID-19 has accelerated the adoption for digital payments this year, and more are expected to come on board.